All right, this is week 22, outlook number 1. Happy Memorial Day to all my Americans. Start with the Great British Pound futures. So we've decided, we've got a little more price action here, in which I should actually go down to the 4-hour. We have mitigated this effective price gap. We've mitigated 100%. We did not tap the invalidation point of this price gap, which is this high here, this high here of this candle. So 100% has been completely mitigated. 50%, we did get a response, but it failed, and so price inevitably ran higher to fill 100%. So we're looking for either price is going to invalidate this price gap, and if it does invalidate it, then it will start moving to take out highs in the premium, with the ultimate high still being those equal highs annotated at 1.3661. And if not, then this price gap is going to succeed, and then we will see price to be propelled lower, aiming for this low. And then also we're still looking for mitigation of the area of interest that we had pointed out. So those are two scenarios that we are seeing. We are still inside of this 4-hour or macro range. All right, moving on to gold, nothing, still in the range. Moving on to the NASDAQ, we are still continuing to move higher. We've created all-time highs. It seems that as of right now, we're looking for a pullback to solidify the price leg. If not, we're still in the continuation phase or the impulse phase of this new potential price leg. We've generated, effectively higher highs and higher lows. And so it looks like as of right now, we're looking to pull back to create potentially a higher low. And if it does not create a higher low, then it will aim for the previous low, in which if it is a break of structure, then it will be a solidification of the price leg. If it ends up being if it ends up being a liquidity draw, then it'll just be basically a liquidity draw, and we'll look for continuation higher. So as of right now, though, we are still in a run. That is the phase of the market. All right, Dow Jones, we've got some new price action. The bearish range has officially been invalidated. We are no longer ranging on the Dow Jones. We are now fully in a bullish run. We have break the structure of all-time highs, which consequently is the high and structural point of this bearish range. So because of that, we have now transitioned into a run phase of the market. And so because we've entered into the run phase, this range markup is no longer valid, and every pullback will be an opportunity for a price to look for, an entry as we continue to impulse and move higher. And then we now have the solidification of this low here as the effective bottom of the range, or bottom of the run. So as we continue moving higher, all of these now points, these basically liquidity points, have been rendered into structural points or transformed into structural points. So if we have a low that ends up getting broken, primarily the main one that I would be looking for is the low. The structural point is the low that ended up breaking that high here. So we are looking at a very interesting period, because we have, starting from here, we have a low, a high, a low, a high, a low, a high, a low. So if price were to break effectively this low here as a form of break of structure, that will actually transition us back into a potential bearish range. But if we end up liquidity drawing from that low, then that would continue. That would just be continuation of the bullish run that we are now in. So a little bit sitting on the sidelines and waiting for more price action to have more definitiveness, because this is fresh. But yeah, that's pretty much it. And on the Dow Jones, so CL1, it's just ranging, not really much to talk about. And then the live cattle futures is messing around as well. All right, that's outlook 1, week 22. Peace.